Hey everyone, it's Keith Schaefer here, editor at investingwhisperer.com. Thank you so much for joining us today. I've got with me Fred Bell, CEO of Elemental Royalties, which I've been following since it was a private company. And I'm very predisposed towards royalty companies, and particularly this one, because as I've said many times, there's nothing for sure in the gold market. It's volatile, it goes up and down, and there's long lead times between milestones, governments can change, blah, blah, blah. We've all been there. But this royalty company is almost a guarantee because they've got their asset done, their acquisition done, revenue is going to double, cash flow is going to quadruple in Q3 this year. And so that's why I bought all the financings here in this company, and I'm a big believer in what Fred and his team are going to do. So Fred, look forward to hearing you explain a little more detail about this acquisition, the timing, the cash flow, and maybe a couple of interesting tidbits along the way.
Fantastic. Thank you, Keith, for the intro. And I think for those who aren't familiar with Elemental, we listed on the TSXV in mid-2020. So we're coming up to a 6-month anniversary here. And we'd been private for sort of 3 years before we listed. And that gave us the space and the time to put together the foundations of the portfolio, good quality, producing royalties, cash flow from day one. And this acquisition that we did in November last year, that is due to close shortly. It's the first acquisition we did as a public company, and it's also been the largest acquisition we've done in our history. And it was a portfolio of 3 gold royalties in Australia, and it came from South32, which was a spin out from BHP Billiton, the world's largest mining company. And it really transforms Elemental in terms of the assets, the jurisdictions, and most importantly, revenue and cash flow. And if you look at us prior to this transaction, we have 5 million revenue for 2020, this US dollar revenue, and we're looking at getting that up to, as a base case, just on this deal alone, we're getting that up to nearly 8 million this year, and then getting up to 12 million in 2022 without us doing anything else. So we have organic growth for the next 3 years. And, as Keith said, the great thing is that if we get another $1 million of revenue, 90% of that is free cash flow. And so if we double our revenue, we're tripling, we're quadrupling our free cash flow from the position we're in. And that's how we really get our growth. And this acquisition of these royalties, it was $55 million US. South32 are becoming Elemental's largest shareholder as part of this, with about 19% of the company. And the main royalty in that portfolio is Australia's newest gold mine. And the management team might not be as well known in Canada, but in Australia, the last company they took from 40 million to a bit over 2 billion. The company before that, that was a gold company. The company before that, they sold for over $1 billion. Again, took it all the way. So it's a very well-known management team on that asset. And the company is called Capricorn, and the mine is Karlawinda. But it gives us another, as a base case, 12 years plus mine life on 120,000 ounce plus a year mine in Western Australia. And so it really, I think, with 1 or 2 of the royalties we've got, including one on Taranga's Wangyon, that did 175,000 ounces in 2020, it really underpins the company. And we can look forward to the next 10 years plus of revenue from both those assets as a base case. If they never discover any more ounces, if we never do anything else. And that's really where the royalty model becomes so powerful, when you have good quality assets with multi-billion-dollar operators and long mine lives ahead of them, and we never have to spend another dollar on them. And I think that the other 2 assets we got from South32, the Laverton mine, it's not as well known, but actually one of the it's a series of open pits and underground mines. But the underground mine there, Lancefield, in the 1990s, it was actually one of the top 10 underground gold mines in Western Australia. And the last time it was mined, in the late 1990s, gold was at about $400 an ounce. So it's some really, really material assets in a great jurisdiction on that again are going to give us a lot of organic growth in the pipeline. And I think the way this transaction came about, and I mentioned South32 becoming our largest shareholder as part of it. I think for a small company like Elemental, if we were a $60 or $70 million market cap before this, and you looked at us and said, well, why is $8 billion South 32, doing a deal the size of the company and taking nearly 20% of you? I think the origins of that go back to maybe 2 years ago, when as a private company, we actually first spoke to South 32. And that's probably not widely known, but I don't think this transaction would have happened without that relationship, without having met them in person, and some of the key sort of same people in their business development team, going back to 2018, really, when we were really a startup royalty company, and we pitched this idea to them. And I think you fast forward then 2 years, 2.5 years, and we're actually doing the deal that we sort of proposed all that time ago, when we were a startup royalty company. And I think a lot of it was enabled by our track record since we started. We've nearly doubled royalty revenue every year since we started. Every fundraising we've done has been at a higher price. And I think that track record and really enabled us to make this deal happen.
So really, what I heard you say was that that would be pretty ballsy, going to an $8 billion company as a private startup, no track record, and say, look, you guys are going to benefit. So I'm guessing the pitch was, if you take 20% in our stock's going to go up, and so you're actually going to make a lot more than if we just did a cash deal. Blah blah. Is that, can you explain the mechanics of that for the listeners? How that, because it's funny how everyone wants to have a higher share price, but if you actually have a lower share price, you can actually make that work in your favor. Yes,
and I think one of the key attractions for South 32 as part of this is the fact that the major royalty here, it comes on stream over the coming months in Australia. And so from this transaction, we're going to see our revenue increasing dramatically as a base case, our free cash flow increasing dramatically, and I think for South 32, they are able to participate in that through us as a shareholder. And it's an old maxim in the royalty space that it always makes more sense you always get a better value for putting your royalties together than you do by selling them individually. And if you take 4 royalties that are all the same and you sell them individually, you might get $1 million for each. But if you put those 4 royalties together, because they're diversified, they're less risk, as a package, they might be worth $6 million. And that's particularly the case here, where you're effectively doubling the size of the company and you're adding in some really high quality assets. And I think that was a key attraction for South 32. And I think, again, track record's really important. I think being able to show that we have done that to date, not all in the public arena, mostly as a private company, but I think that's what enabled us to really sort of get to this position where 2021 looks like a really pivotal year for Elemental. So really, you're in a great spot now where you've got all this cash flow coming in. When you're out looking at your next deal now, and I know we've only got a minute and a half left here, how does that color your thinking? What does that increase your options for you a lot, or do you need like 5-6 times this amount of cash flow to really kind of give you the kind of flexibility you need? How when you're out looking at your next deal now, with this one under your belt, what's changed for you when you're out negotiating and looking at projects? I think the two key factors there, and one of them is always, we said from startup, we wanted to get to the position of having 10 million a year of royalty revenue. And I think from middle of sort of 2021 onwards, we will be looking at $10 million annualized revenue. And that's been a key target for us, because at that point, you always have enough money to cover your costs, your listing costs, your business development costs, but you also crucially can start really reinvesting that money back into new royalty opportunities. So you're not diluting yourself. So I think that's going to be one of the key drivers from this, the ability to use revenue to invest in more royalties going forwards. And then I think the second one, which is important, is that for the big institutional investors, they need to have, if you're less than 100 million market cap, often they can't participate. And so I think this transaction puts us on the radar for some of the big institutional investors who will now be able to participate in Elemental going forwards and help support our growth. And we've had some really really good, supportive institutional investors so far. And I think that as we grow the company, we're going to be able to attract more of those. And so it's a virtuous circle going forwards.
Got it. Fred, we're out of time. Thank you so much for all your information today. God bless you.
Thank you, Keith.